Welcome back. You're tuned in to Inside Out. As promised, let's get straight to our Spotlight segment. Well, the company we are focusing on is Control Print. It's a play on the Indian economy and on the formalization of the economy. Additionally, in the past year, the industry was constrained by the shortage of chips. But thankfully, that's easing. Now, the company is involved in the manufacturing, coding, and marking solutions in India, which are crucial in the manufacturing supply chains of both industrials as well as consumer goods. It is involved in the development, research, manufacturing, and marketing of printing machines, spare parts, consumables, and associated services. Now, the demand for continuous inkjet technology-based printing has been rising as it enables high-speed printing and can be used on most of the product substrates and is also cost-effective. The industry is also witnessing a shift towards coding and marking solutions as it enables high-volume printing at high speeds. The food and the beverage industry remains one of the biggest contributors to growth of the industry, followed by manufacturing, pharmaceuticals, electronics, as well as the automobile industry. The company has exposure to a variety of sectors and some of the top names that are mentioned for you on the screen. Well, the coding and marking solutions in India is oligopolistic in nature, with a market size of around 1,800 crores. The market is dominated by 3 MNC players, while Control Print, that's the lone local player with a market share of around 18.5%. Overall, coding and marking industry growth in India is expected at around 10% per annum, led by demand from industrial as well as consumer goods sectors. Now, focusing on Control Print's revenues itself, 55 to 60% of their business comes in from the sale of consumables. That includes inks as well as cartridges. 15 to 20% of the sales comes in from sales of printers. And service income, which includes maintenance contracts, accounts for around 10 to around 15%. And the balance amount is accounted for by sale of spares. Just to give you an idea on how it works, post the printer sales, there is continuous demand for consumables over its life, which typically lasts close to around 5 to around 8 years. Now, that depends on the operating condition. Moving to the financials then, in the recently declared quarterly numbers, Control Print reported its highest ever quarterly revenue of around 80 crores. That was led by multiple product portfolio offerings to its clients and consumable sales as well. The margins have been holding around mid-20s and gross margins hovering around that 60% odd mark. For the past few years, well, the company has delivered steady growth, barring FY19 as well as 18, when there was no growth. But what they're guiding for is interesting. They're talking about 400 crores in standalone revenues by FY25. That compares with around 291 crores in FY23. Well, the company plans on achieving this target by widening its footprint, its capacity, as well as its market share. Additionally, the tax rates have been relatively lower. That's because of the Guwahati operations that gets some tax benefits. Now, Bloomberg estimates a big increase in the EPS in the coming years. And so on a forward basis, the stock trades at around 16 times if you're looking at FY24. If you're looking at FY25, then it trades at around 13.5 times. The key point to note is, can they achieve this guidance of around 400 crores of standalone revenues? The promoter entity holds close to around 50% stake in the company, and the institutional holding as well is around 15%. Some of the prominent domestic as well as foreign funds hold a good stake in the company. Well, we've run out of time on this edition of Inside Out. It's goodbye from Sonal and myself. But do write to us and tell us about companies that you want us to discuss, and we'll try to feature some of them on our show. Thanks so much for watching.